Space, the final frontier. These are the voyages of the Crypto Starship. Its mission, to explore new technologies, to seek out new life in the crypto universe, to boldly go where no blockchain has gone before.
Hey guys, this is Captain Eric.
And Captain Derek.
And welcome to this great, lovely Thursday night of April. We are back to our homeland. So I'm back in the States, and Derek's homeland isn't Bali, but he currently is residing there. So he's back away. We came back from our conference last week, and we are trying to get back on schedule, which is always difficult.
Yeah.
How's it over there, Derek?
It's good. Went surfing yesterday, sucking less and less at surfing. So that's good. It's nice and sunny as always in Bali. Yeah, life is good. I'm slowly getting back in the train of everything. I'm, getting back in the flow.
That's good.
How's everything looking in Colorado?
Sunny, which is great. Sunny, and the markets are up, so it's extra sunny here in Colorado.
Sunny all around.
Sunny all around. Loving it. How's it feeling over there with everything going on in the crypto market right now, Derek?
Yeah, it's been feeling really good. I mean, I don't think there's anyone in the crypto markets anywhere in the world that would be unhappy with what's going on right now. So
maybe those who sold like last month.
Oh yeah, that's true. There probably are a lot of people that are unhappy now that you mention it.
Yeah, do you know, I have a lot of friends that were doing taxes this past month, and they had to sell a lot of their crypto assets off in order to pay their taxes. And I think part of the reason, and I think I mentioned this in a past podcast, that the market was going down, and we'll talk about the market in general today, but people having to sell off their assets to pay off taxes was definitely a reason. There was, according to an article, I think on CCN, about $25 billion worth of taxes for the U.S. That were owed to the U.S. government. I'm sure not even 20% of that actually got paid to the U.S. government, but that was one of the main articles. So it's quite interesting how many people had to sell off in the past couple weeks, if not month.
Yeah, and I think the IRS actually came out and said not very many people reported crypto earnings, which is definitely interesting. And yeah, as for people selling, I think it's interesting. Like if I notice my own emotions and kind of like a meditation kind of way, like observe how I'm feeling, it's often when I feel like selling the most that I should least sell. And when I feel like buying the most is when I should least buy.
You should sell more.
Yeah, exactly. So it's amazing how the human emotion is naturally driven to essentially sell low and buy high.
Yeah, and lose money most of the time between FOMO and fear, driving you into different scenarios. And the herd mentality of seeing everyone else jumping in or making money and wanting to follow the crowd is definitely playing into that. But before we started on the podcast itself, Derek, you mentioned that the markets itself to you seem very, what was the exact word you used as you were describing it to me?
Arbitrary.
Yeah. Why do you feel this way?
So this most recent run up in crypto prices, if we think back to, let's say, about a week ago, it started because of a short squeeze, right? The price went up a little bit, and that closed out short sellers' positions, which meant they had to buy at market rates. And the short sellers buying triggered more short sellers to buy, and that kind of created a cascading effect. Essentially, there were so many people betting against the market that when the market went up a little bit, that triggered everyone who was against the market who had positions. They had to buy to cover their positions, and that creates a cascading effect. And that drove the market up by maybe 25% over the course of a few hours. And that created the cascading effect of generating buzz, getting a little bit of news, getting people excited again, getting people to buy in again. And then that kind of created the upward momentum that we're seeing today, which in a way is really completely arbitrary. There's no real driving force that says the market was, fundamentally doing something bad, and now it's fundamentally doing something good. And when I think back to what shifted the market from the crazy bull market of November, December to the down market we had in January, February, it was also a very similar arbitrary thing that got it all started. First, it was CoinMarketCap delisting the Korean exchanges from their algorithm, which just took off some volume and some pricing from a bunch of tokens.
Yep.
These tokens actually didn't decrease in price on the exchanges they were trading at. It was just that CoinMarketCap changed the way they were evaluating the algorithm and what they were displaying on their website, which caused people to think that the market caps had dipped,
dropped,
and which caused people to start selling. And then there was the Korea ban, which Korea then retracted, right? So these things were somewhat, it really wasn't fundamental news. It was just like something causes a shock to the pricing. Something causes a shock and the price goes in one direction, and then it just kind of cascades from there. And I've seen the crypto markets basically do that. It's amazing how in the stock market you can see this happen. Like there'd be a shock to the price and then it returns to equilibrium. It returns back to fundamentals. But in the crypto markets, you can have a shock to the price and that triggers like a multi-month bear market or bull market.
It's just an onwards, downward spiral, and the vice versa. When you see an uptrend, it could take a matter of 2 weeks for the market cap to triple. So much different fundamentally than what we see in our traditional markets. And it's interesting to learn over the years as you're involved with this overall marketplace with cryptocurrencies to see these trends, how they work, how fundamentally different it is from traditional investing and traditional markets. And before we move on to talk about that a little deeper, that brings me to a point where some traditional markets are actually starting to look at the future of cryptocurrency and actually building an exchange, aka the NASDAQ, and other companies are looking to potentially get into cryptocurrency in the future as the market matures, as they put it. Now, what that actually means, will the cryptocurrency market ever mature? I'm not really sure if that will be the case. Maybe in years from now, but I don't think it'll ever mature to the level of a traditional market itself.
Yeah, I don't know if people realize, but NASDAQ is actually quite an active investor not in cryptocurrencies, but in cryptocurrency companies. I could probably be getting this wrong, but I think NASDAQ was an investor in Poloniex, in Coinbase, in a lot of the major brands that you would see in the crypto space. So yeah, I think they're definitely have been keeping a close eye on these developments.
Yeah, I think they're getting closer and closer to making a decision where, unlike a lot of traditional companies, if you look at traditional companies in general, they take a long time to catch up to a trend that has passed them, and they start getting a lot of value taken away from them from smaller companies that may have gone to e-commerce, for example. If we're talking about traditional brands and traditional products, people that went to Amazon directly and bypassed traditional marketplaces like Walmart and so on, you're starting to see those older companies, whether they be consumer packaged goods or technology, lose out to the newer companies because they took forever to get on board to a new trend or a new business practice. And NASDAQ and similar companies are keeping an eye very close early on in the game so they don't fall behind. They just because they have the majority of stocks offered through their platform, it doesn't necessarily mean that in the future they'll still be around. The same way we've lost Kodak and many other companies because they were unwilling to innovate. So it'll be interesting to see how that evolves over time. And if they do decide to go down that route, what does it mean for the industry as a whole? Does it give it more validation? Does it start having people question the traditional share stock market? What happens when that gets turned on? I'm not sure, but it will be quite interesting to see how things evolve when we get to that point.
Yeah, agreed. I think the major bottleneck, so major adoption would probably happen when we are able to sign on everyday investors through existing portals, right? When you can sign into your Charles Schwab account and buy Bitcoin. And I think NASDAQ can definitely help with that, though probably the major hurdles with the SEC. So they've originally denied a bunch of the Bitcoin ETFs, and now they have put it back on the table. But ETFs are not necessarily the only way to go, right? You can have a stock that holds Bitcoin. You can have a number of different financial instruments that essentially track the movement of Bitcoin. So an ETF is an exchange traded fund, which essentially you can buy gold on very similarly to how you would buy stock. And people are trying to make that possible with Bitcoin as well, or Ethereum. And so far, the SEC has denied all of those possibilities, but they've recently put it back on the table. And, if they approve it, or if the NASDAQ in some other way makes it possible for people, for everyday investors to be exposed to the pricing of Bitcoin without having to deal with actually taking custody of Bitcoin, making sure they don't get hacked, hardware wallets, all that stuff, then yeah, I think that would be a big step forward.
Yeah, it's one of those things where we can get to the ETF level, or are we going to keep going past that to the next financial tools that come out because of this space? Or do people think we get stuck with the traditional methodologies and approaches that have been put in place? I'm not sure. I think we start there, but over time it's going to continue to grow. We're going to see new financial instruments coming out and ways of leveraging cryptocurrency in general that are completely different than the traditional sense, which a lot of people are hoping for, but we don't really know what that means yet overall.
Two things that I'm really interested in is, number one, a lot of financial services that you would traditionally think of as belonging to the banking sector are moving over to smart contracts. So things like derivatives, shorting, margin trading. Right now, you can margin trade on a lot of the larger exchanges such as Bitfinex and BitMEX. But yeah, there's a lot of people building those into smart contracts now, likewise for derivatives. And these are essentially financial products that let you bet on future outcomes without necessarily owning the underlying asset. So I could say that if Bitcoin goes up by $500, then my position goes up by $5,000, right? So that's a 10x margin on a trade. And all of those are just financial agreements between different parties, which can be coded into a smart contract. So nobody's actually launched a platform yet that's smart contract based that has all these products, but I wouldn't be surprised if you start seeing these in the next 2-3 years. And we've actually talked to a number of projects working on this. And I think that's going to be quite an interesting thing to observe and participate in, because a lot of the reasons that people don't use derivatives and margin trading and all these different products is that it's really hard to actually get your hands on them, right? If you're not like an investment bank and not a professional trader, it's pretty difficult to, if you sign into your Charles Schwab account, for example, or any other brokerage account, oftentimes these products are kind of, there's an additional layer of filtering before you can get access to them. So yeah, I'd be really interested to see what happens when these kind of hit mainstream and are accessible in a decentralized kind of way. And the second thought is, the crypto markets is actually one of the first times when a financial market has streamed into the institutional markets from bottom up. So typically what you see is institutional markets get access to financial products first. So they might get access to margin trading or derivatives or bonds or whatever the case may be. And then they trade billions and billions of dollars. And then eventually it winds up in your Charles Schwab account or in your E-Trade account or whatever, right? It's typically, it almost never happens in the way that it's been happening in crypto, where a product becomes so popular amongst everyday people that institutional investors have to pay attention.
Yeah, and going off your first point, going back to when it comes to financial institutions using the blockchain, there's actually a good example of this with the Spanish bank BBVA, which I believe is the second biggest lender in Spain. They've now processed, I believe, $91 million worth of loans on the Ethereum blockchain. So this is
That's awesome.
example of a real bank that exists, that's actually quite prevalent in Spain and around the world, that is leveraging the public blockchain to finalize loans. Now, they do a 2-blockchain system. One's internal. They go through the whole process, verification, the loan, and then they write it to the public blockchain of Ethereum once it's finalized. But they already have done 91 million. Imagine in the next 3 years where this goes with just BBVA, and let alone all the other companies that most likely will start moving in this direction, including non-traditional banks and loans like Salt Lending. So you're going to see more and more of this actually come out with real-world banks and new startups that are going to drive quite interesting use cases in the financial markets for cryptocurrency.
I think that's a really good business decision for these banks to do that, because let's say you're wrong. Let's say me and you are both wrong and blockchain turns out to not be as big a deal as we think. These banks might end up spending 0.3% of their profits for 2-3 years exploring the technology. But if we're right and this technology becomes as big a deal as we think it is, that can essentially protect them from from becoming the blockbuster or becoming the Kodak that didn't see the next technology and becomes obsolete, right? So it's a very small cost to pay to make sure that you're on the right side of an exponential technology.
Yeah, completely. And actually, I'm less worried about the big banks, and I think a lot of them will start putting these actions in place to protect themselves. I think the government's going to have to protect the credit unions, and that's where most of the big first mover removal of financial institutions will happen. And that's I think it's going to be unfortunate, because credit unions are traditionally some of the best places to hold your money if you're going to be in the banking system. But they're just never going to have the resources to keep up with this fast transaction and speed. They're too separate and too independent to actually allow progression they're going to be required to have in the next 5 or 10 years, if we are correct. So I actually think the big banks are going to be the ones that have less of a struggle than institutions that just are starting to get mobile applications for their users. Yeah, it's 2018. We just officially launched the 1996 looking mobile application, so you can see how much money you have in your bank. So I think BBVA is a pioneer that's pushing this forward faster than anyone else currently in the banking world. I do believe other banks will get on board quicker than old money institutions and credit unions and lower financial spaces. So it'll be quite interesting to see what happens over there.
Yeah. So that reminds me of, so a friend of mine's doing an ICO, I think in Slovenia. And he tells me it's really funny when they go into the banks, because they go in and they're like, yeah, we're looking to do this, this type of service on the blockchain. It's a decentralized ledger. And they're like, we just got computers. Like, what are you talking about?
We've been writing these transactions down for the past 100 years. Like we have our own ledger. It's right there in the back in the safe.
Yeah.
It's about 700 thick books worth of transactions. That's funny. It's going to be crazy to see where this goes. Who knows? Maybe there'll be a ICO that comes out for the credit unions of the world to take part in the blockchain revolution. But still, that's not going to do much for the space.
Yeah, I mean, there's an ICO for everything.
ICO for you, ICO for you, ICO for you. Yes, I agree. It's been quite the week. I'm excited about the markets. I think there's some interesting news with different banks coming out and what we talked about today. I will be interested to see how ICO investing picks up over the next few months as the people are moving money back into Ethereum and more ICOs are coming out. If you look at the top sites like ICO Drops and ICO Alerts, you're starting to see more and more of the ICOs are being fully funded compared to last month, where 10% to 50% of the ICO was actually funded during the time that it was live. So it will be interesting to see how that transaction happens back into investing or not.
Yeah, and I think a really good chart to keep an eye on is the Ethereum to Bitcoin ratio. So typically when people are scared, they move to Bitcoin, right? That's the gold reserve, golden standard of the cryptocurrency space. And once people are feeling a little bit more risk tolerant, they move to Ethereum, because Ethereum is what you use to buy into ICOs. So over the last couple weeks, we've seen Ethereum go from 0.05. It's 0.05 Bitcoin per Ethereum to, I think it's now about 0.65. So quite a significant jump there. And at its peak, Ethereum was actually worth probably about 0.15. So triple of what it was just a couple of weeks ago. But as we see more and more ICOs take off, if we see more and more ICOs take off, and if we see more and more of these altcoins take off, I think this particular chart, Ethereum to Bitcoin, is a really good indicator of where the market sentiment is in terms of altcoins to Bitcoin.
Yep. it's going to be quite interesting, and we'll start seeing the different telegrams and ICO telegrams light up. I also look at the amount of conversation that are happening in those spaces to see how active people are. Facebook groups, Telegram groups, anything that's related to investing. If people are coming back into the conversation, that usually means healthy investment, which means more ICOs being invested in me, which means more Ethereum being bought usually. So that will be quite interesting to see over the next couple months.
Yeah. I do think just in terms of and this is not backed up by data in any way, but just in terms of a market sentiment, I do think people are still feeling the wounds of January, February.
Mm-hmm.
And I think people are in November, December, people were basically saying like, everything's going up, let's put money in everything. There was a kind of an irrational exuberance. And I think right now people are much more cautious. They're cautiously optimistic, I think, but still kind of feeling the pain of January.
Yep.
And I think the mainstream media as well, they're a little, it's not as, basically what I'm trying to say is I'm really happy with what the market's doing right now, but I do think that people are approaching it much more cautiously than they were in, say, November.
Well, I guess it does take at least a couple weeks before people get comfortable again and start irrationally deciding what they're going to do with their money. So give it a couple more weeks, a month.
When Lambo.
And we'll be right back to where we were in November and December. If you look at the charts over years, it's this a similar trend, right? It's just a lot more people are in the game now, right? So you feel it a lot more because a lot more people around you are affected compared to like the year before, 2017 or 2016 or 2015, when there was only a few people that really were riding this wave compared to now. So it doesn't feel as big of a deal back then because the news wasn't going crazy about it and people weren't talking about it nonstop, and ordinary people or less ordinary people were investing. Yeah.
To a certain extent, I agree with that analysis, and to a certain extent, I don't. People often point to exponential curves and extrapolate that to forever and say that, for example, if you looked at internet speeds 20 years ago and the rate at which it was increasing, you would say that by today we would have internet speeds of like 1 billion megabits per second, right? At how quickly it's increasing. But the reality is exponential curves almost always turn into S curves. So you have the flat line at the bottom that then turns into an exponential, and then at some point it curves back out, and the rate of increase decreases dramatically, right? So for the last 5 years, broadband speeds have essentially stayed constant. And if you look at like CPU processing speed or just about any other exponential technology, you find the discovery phase where not a lot of people know about it, and then you find that the liftoff where the technology grows in an exponent, and then at some point it turns back into an S curve. So I think we're still a ways away from any kind of like market plateau, but I think as more and more everyday investors get involved and as more and more institutional investors get involved, at some point this technology will switch from being it was a bet that's against the grain, right? A few years ago, if you're betting on Bitcoin, like you're betting against the grain and you're rewarded for that bet. At some point, it'll be so mainstream that that the potential returns will go down and the curve will flatten out. I think we'll see less of that crazy exponential curve again and again. But I do think, right now we're at $400 or $500 billion, and the tech bubble of 1999 was like $3 trillion. So I think
that was 20 years ago.
That was 20 years ago, before the internet, because they were inventing the internet. So I think we still have a ways to go, is what I'm saying. But I also would be cautious of taking that, like, just because every time Bitcoin has gone 10x every X number of years, I would be cautious of taking that as a rule of thumb, especially as more and more people are aware of that trend.
Completely. I don't think we hit an S curve yet. I think we have in other technologies. And like every S curve, though, you look at, for example, the internet today at 1 gig on average at the highest level for fiber optics. And the next step to get back to growth is going to be mobile wireless advancements with 5G and 6G, which is going to push the S curve again and allow us to go much faster. So with the S curve, there is a flattening, but there usually is at some point during that S curve reacceleration. Awesome. I think this was a great breakdown of the market, Derek. I really appreciate you going into detail and thought about where you think we are currently. And for me, it's just give it another couple weeks, guys. Maybe we'll have all our confidence back and we can just start investing anything we want again.
Or we can all cry and commiserate. Either way.
Love it. Okay, guys, I am Captain Eric.
Captain Derek.
And we are the Crypto Starship. We'll see you guys next time.
The Crypto Starship is a production of Starship Media LLC. The contents of the show, including our videos, podcasts, and our website, are provided for informational, educational, and entertainment purposes only. It's not intended to be and does not constitute financial, investing, or trading advice of any kind. You shouldn't make any financial, investing, trading, or life decisions based on our show. Understand that investing or trading in digital assets has potential risks involved. Before investing, make sure to do your own due diligence and consult with a professional financial advisor.